The markets have been rallying like crazy with the Nasdaq index up more than 30% year to date. However, there's a popular growth stock that is just going in the opposite direction with the stock down more than 35% year to date. This stock has been on my watch list for quite some time now, and given its recent sell-off, my contrarian instincts kicked in and I just have to take a closer look at the company. My name is Riyado and this channel is all about finding the companies of tomorrow, and in today's video, I will be analyzing Enphase, ticker symbol ENPH, and as always, I will be covering the company's financials, valuation, risks, and more. And with that out of the way, let's take a look at Enphase stock. Just to give you guys a little bit background about solar energy production, solar panels generate electricity in the form of DC current or DC, which is sent to an inverter, which consequently converts the DC into alternating current or AC. That AC power is then used to power your home appliances, charge devices, and so on. And today there are three ways in which solar panels convert solar energy to DC and ultimately to AC. First, we have string inverters, which is probably the oldest and most common way. With string inverters, all of the solar panels are connected to a single inverter, and because only one inverter is required, this method is usually the cheapest out of the three. However, the downside is that string inverters has a single point of failure, meaning the entire system is only as efficient as the lowest performing solar panel. So for example, as shown in this diagram, if one of the panel is partially covered by a shade and can only produce 50% of DC output, then the entire system, including the other panels, will also produce only 50% output. So put simply, string inverters are cheap but inefficient, and this is why it is more commonly used in utility projects where shade is not an issue, such as in a desert or a large field. To solve the issues that come with string inverters, we can use the other two methods, which are relatively new. First, we have power optimizers, and a popular company that offers this solution is SolarEdge. Basically, these devices are installed on each solar panel, which essentially isolates each solar panel. So if one of the solar panel can only produce 50% output, the rest of the modules will not be affected, and therefore the system could run more efficiently. However, with power optimizers, a string inverter is still required, which again, if the inverter fails, the entire system fails as well. And that's where micro inverters come in, which is pioneered by Enphase. Just like power optimizers, micro inverters are installed in each PV module, as you can see right here. But unlike power optimizers, micro inverters do not need a separate inverter, but instead converts DC power to AC power immediately at each solar panel level. In other words, micro inverters are exactly what they sound like, mini inverters. And although micro inverters are the most expensive option, they are the most efficient form of inverters today. And because of that superior efficiency, reliability, and safety, consumers and businesses are not hesitant to pay extra bucks for microinverter systems, and that is why Enphase's business is growing so rapidly. In a nutshell, Enphase is the leading supplier of semiconductor-based microinverter systems, and the Enphase energy system that you see right here enables users to capture solar energy, store those energy, and manage them in one software-enabled platform. At the same time, the Enphase system enables users to lower utility bills, reduce carbon footprint, as well as power an entire building off the grid or if the grid goes down. So diving deeper, the Enphase system consists of three major components. First, there's Enphase's bread and butter, which is its microinverters, which converts DC to AC at the individual panel level. This includes the IQ7 as well as the recently launched IQ8, which has the new sunlight backup feature that allows users access to power even without the grid and battery. And it's also important to note that Enphase do not sell solar panels, but instead the inverter, which is one of, if not the most important component of a solar panel. Next, there's the Enphase IQ Gateway, which basically connects the microinverters and the Enphase app by communicating with the microinverters via AC power and the Enphase app via Wi-Fi. By doing so, users can monitor solar production and energy consumption remotely through the Enphase Enlighten platform or app, and in addition, Enphase's cloud-based system allows for remote firmware and software updates and maintenance. Of course, there's other products such as Enphase's IQ batteries, which stores solar power to use anytime, even during outages, as well as Enphase bidirectional EV charger, which can charge a car with the sun and power homes during an outage. But to sum it all up, Enphase offers solar, storage, and energy management solutions powered by its industry-first microinverters. Now that we understand what the company does, let's take a closer look at its competitive advantages. Based on my research and analysis, I identified 3 competitive moats for Enphase, and the first one being technology. So Enphase was founded in 2006 by Raghu Belur and Martin Fornich, and the two basically invented the first microinverter-based solar energy system, giving Enphase first mover advantage. Compared to competitors, its innovative technology offers higher quality, efficiency, safety, flexibility, reliability, and most of all, value. It is also important to note that Enphase's microinverters are also module agnostic, meaning they can work with virtually every solar panel made. Through its unique value proposition, it is no surprise that Enphase is loved by consumers and installers alike, earning the company a Net Promoter Score of 75. And an Energy Sage report released in March 2023 also mentioned that Enphase was the most quoted inverter and battery brand, which is a testament to the company's incredible technology and brand power. The second moat that Enphase has is its high switching cost moat, and unlike string inverters and power optimizers, microinverters are more expensive and difficult to install, given that they are small devices that need to be installed on every single individual solar module. And once consumers and businesses have invested their money on Enphase microinverters, it will be very difficult for them to switch, given that they have to uninstall every microinverter as well as replace it with an alternative device, which is often a downgrade to Enphase's best-in-class technology. In addition, adding Enphase batteries and EV chargers into the system further solidifies the switching cost moat. Not only that, but Enphase also offers the installer platform, which is an end-to-end digital platform that provides the tools, guidelines, and documentation for installers to seamlessly execute on their Enphase installation plans. This includes its recent business acquisitions such as DIN, which provides proposal and permitting services, Solar Lead Factory, which provides high-quality leads to solar installers, as well as 365 Pronto, which is an on-demand platform for cleantech homeowners to connect with installers and servicers. With that being said, Enphase's vertically integrated platform streamlines the entire installation and maintenance processes, which makes it very convenient for installers to remain in the platform. Finally, I believe Enphase has a cost advantages moats, and first, the company has a capital-light business model, and Enphase does not have any big factories but instead works with various suppliers and third-party contract manufacturers to commercialize its products. This way, Enphase can save on production costs and use that savings to scale further or invest in R&D. Secondly, Enphase has superior margins compared to competitors, and as you can see, Enphase has a high gross margin of about 45%, which is far ahead of its closest competitor, SolarEdge. And last but not least, the Enphase ecosystem is large and growing, and as of Q1, Enphase has over 1,400 installers in its installer network. It has also deployed 63 million microinverters, 917 megawatt hours of energy storage systems, and 3.3 million systems across 145 countries worldwide. And as the company scales further, the company should gain economies of scale, which further strengthens its cost advantages moat. Now that we've talked about the company, let's take a look at its financials. So here's a chart of Enphase's revenue and its year-over-year growth rate, and as you can see, revenue pulled back during the early days of the pandemic as supply chain issues and government lockdowns put pressure on demand. However, the business quickly recovered in the following quarters, with revenue growth peaking at 152% in Q2 of 2021. And since then, growth has slowed down and stabilized. So in 2022, revenue was $2.3 billion, which is up 69% year over year, and in Q1, revenue was $726 million, which is up 65% year over year. This growth is due to higher consumer demand, increased shipments in both microinverters and batteries, as well as higher average selling prices of its microinverters as the company sold more of its newer IQ8 microinverters, as well as the company raising prices of its product offerings. That said, despite the slowdown, growth is still very strong in the last few quarters. However, I do expect growth to decelerate further due to reasons that I will discuss further later. And besides, it is much harder to sustain this kind of growth as the company gets larger in size. Now, if we look at the different key performance metrics, we can see what is driving the company's growth. And as mentioned earlier, the company's spectacular growth has been driven by increased shipments in both microinverters and batteries. As you can see, microinverter shipments in terms terms of units and megawatts have been very strong over the last few quarters, with 4.8 million units and nearly 2 million megawatts shipped in Q1 alone, which is up 70% and 90% year over year respectively. On the other hand, battery shipments grew exponentially last year and then decelerated to negative growth in the first quarter to just 102 megawatt hours, which is down 15% year over year. And the likely reason for this is due to high interest rates, which negatively affected affordability. And since batteries are the most expensive component and are not essential components of a solar energy system, it is not surprising to see a drop in battery demand. However, I think this is just a temporary headwind for the battery segment, as consumers will eventually adjust to the high interest rate environment, and over time, demand should pick up again as consumers all over the world transition to off-the-grid power systems. Moving on, you can see revenue broken down by geography, namely US and international revenue. The US has been Enphase's main market, generating more than 50% of total revenue. However, US revenue as a percentage of total revenue, as you can see right here, is gradually declining due to a combination of slowing US revenue growth and aggressive international expansion. As you can see, US revenue is decelerating substantially, most notably in Q1 this year, where US revenue only grew by 28% year over year, or declining 9% quarter over quarter, mainly due to seasonality and macroeconomic conditions. So during the Q1 earnings call, management mentioned that sell-through of its microinverters in the US decreased 21% sequentially compared to Q4, which is worse than the typical seasonality of 15%. In California, the sell-through was only 9% lesser than Q4, and this is due to the NEM 2.0 rush in Q1. So if you're not aware yet, California has introduced a new net metering policy called Net Energy Metering 3.0, which will be in effect starting April 15. And the main difference between NEM 2.0 and NEM 3.0 is that version 3.0 is expected to significantly reduce the average export rate in California, which is the price of excess electricity delivered to the grid. In other words, consumers under NEM 3.0 will receive less compensation for net metering credits, which increases the payback period for their solar installations. As such, consumers are rushing to get their solar systems before the new NEM 3.0 goes into effect, which is why microinverter sell-through in California was only 9% lower compared to non-California states, which was 25% lower in Q1. On the battery side, sell-through of batteries in California was 23% lesser in Q1 compared to Q4, as installers focus mainly on solar, and management expect this to continue in the next few months, while sell-through of batteries in non-California states was 28% lesser in Q1 compared to Q4. So clearly, there's a struggle in sell-through rates in the US business, and the main reasons why that is so is because of the rapid increase in interest rates, as well as delayed payments from loan originators to installers, which creates a working capital challenge for installers. But that aside, the international business is growing exponentially, driven mainly by Europe, which grew 25% sequentially and more than tripled year over year. Management also mentioned that the sell-through of its microinverters in Europe is at an all-time high in Q1. That said, the growth of the international business is encouraging to see, and it's nice to see that the company is capitalizing on opportunities outside of the US. And to see that kind of growth in the international business means that there's tons of optionality and revenue potential for Enphase. Besides, international revenue only makes up 35% of total revenue, which means plenty of room for international expansion. There's no denying that the world is transitioning to renewable sources of energy, including solar energy, and this transition should benefit solar companies like Enphase, which is why we're seeing such strong growth over the last few quarters and years. Issues such as power outages, rising utility costs, and global warming are all pushing solar adoption faster than ever before, and this is going to be a long-term trend for decades to come. And given Enphase's strong competitive position in the microinverter market today, there's little to no doubt that Enphase will be a dominant force in the solar space in the long run. Turning to profitability, gross profit has been growing steadily, as you can see right here, and in 2022, gross profit was $975 million, which represents a 42% GAAP margin and a 43% non-GAAP margin. And the main difference is that non-GAAP measures exclude stock-based compensation expenses, so keep that in mind. Moving on, Q1 gross profit was $326 million, which is a 45% GAAP margin and a 46% non-GAAP gross margin. You may have noticed that gross margin spiked in Q3 and Q4 of 2020, and this is due to tariff refunds which were previously paid on microinverters imported to the US from China, and so without these refunds, gross margins would have been about 41%. That said, notice how gross margins have been improving over the last few quarters, and this is due to higher average selling prices, favorable product mix as the company sells more of its newer, more advanced IQ8 microinverters, as well as improved logistics. Moving down the income statement, operating profit in 2022 was $448 million, which represents a 19% GAAP operating margin and a 30% non-GAAP operating margin. And in Q1, operating profit was $168 million, which is a 23% GAAP operating margin and a 32% non-GAAP operating margin. As you can see, both metrics have been improving over the last few quarters, which reflects management's disciplined cost control as well as operating leverage within the entire business. Here we can see how net income has trended over the last few quarters. In 2022, net income was $397 million, which is a 17% GAAP net margin and a 28% non-GAAP net margin. And in Q1, it was $147 million, which is a 20% GAAP margin and a 26% non-GAAP net margin. And as you can see, net income margins have also been improving over the last few quarters, which is really great to see. So fundamentally speaking, Enphase is a highly profitable business that is growing rapidly in the emerging solar industry, and it's also great to see that margins are improving, which shows economies of scale and operating leverage within the business model. It's quite rare to find companies that are growing at such a high pace without sacrificing profitability, but we won't know for sure how margins will look like in the long term as competition in the microinverter category intensifies, as well as the solar components become commoditized. That said, I'm impressed with the margin profile of Enphase, and to see that the company's margins are improving also means that the company has strong pricing power as well as a strengthening of its cost advantages moat. This is part 1 of a 2-part video, and in the second part I'll be talking more about Enphase's outlook, valuation and risks. And if you're interested in watching part 2, you can click in this video right here, or you can find the link to part 2 in the description below. Also, if you find value in this video, don't forget to like and subscribe and support the channel. And as always, I appreciate you and I hope you have an amazing day. Thank you, and I'll see you guys in part 2.